In this video, we will discuss 5 candle patterns. So if you look at these 3 candles, you actually should see 5 candle patterns here, and I will explain what those 5 candle patterns are. This is where you can test your knowledge of candlesticks. If you have sophisticated knowledge of candlesticks, then you can easily see 5 patterns here. We will discuss that. Before that, have a look at this rising window between these 2 candles. I have drawn a support line here. We know that the rising window becomes support. So this blue line is the support. This is a daily time frame chart of Tata Motors. So let's look at this candle here. It's a small real body coming after a downtrend, and it is gapping away from the prior long red real body. Okay, that is called as a star. A small real body gapping away from the prior long real body or coming after a downtrend. So that's the first pattern. The second pattern is the high wave candle. It is also called as a high wave candle because it has a long upper shadow and a long lower shadow and a small real body. So let's call it high wave candle. And a star and a high wave candle both are reversal patterns. What does reversal mean? Reversal means that the prior trend is likely to end, which means the price can either go sideways or can go up from here after this small candle. Okay, anything can happen. So that's the high wave candle and the star. Remember, we are not allowed to initiate a trade on the star or the high wave candle because these are not very powerful patterns. They just change the trend from down to neutral, or if they appear after an uptrend, then it changes the trend from up to neutral. Okay, so we have 2 patterns here. The third pattern is, if you look at these 2 candles, if these 2 candles come after a uptrend somewhere here, that is called as a bearish engulfing pattern. However, since it is coming after a downtrend, it is called as a last engulfing bottom. It comes after a downtrend. The second candle completely engulfs the prior small real body, and the second candle is red, usually long real body, and the first candle is green. Okay, so this is a reverse of a engulfing pattern. This is called as a last engulfing bottom. It's a bullish pattern, although there is a red candle here, but it is called as a bullish reversal pattern. So we have already looked at 3 candle patterns here. Number 4, if you look at these 2 candles, this is called as a bull sash pattern. Why? Because the opening of the green candle is above the midpoint of the prior red real body, and it's like a variation of a bullish engulfing pattern. So this is number 4 and this is number 5, variation of a bullish engulfing pattern, because this candle could have easily opened here and it would have engulfed the entire red candle. So that becomes a bullish engulfing pattern. So you have a star, you have a high wave candle, you have a last engulfing bottom, and you also have a bull sash pattern and a variation of a bullish engulfing pattern. This is 5. Okay, number 6. The opening of the candle is above the midpoint of the prior real body. That's called as a strong opening candle. Strong opening itself is a candle pattern which makes it very bullish. Okay, number 7, after a last engulfing bottom, if the next candle closes above the close of this prior red real body, then it is bullish. So the closing price is very important for this candle. So as you can see here, we get 7 different signals here, all pointing towards a bullishness. Moreover, all of this action is taking place at the support level established by the window. This candle confirms the support That's point number 8. Moreover, here you have a bullish engulfing pattern. So this is called as a false breakout. You can add one more point to that. So there are 9 signals here. Okay, I just counted those signals for you. Total 9 indications coming here, all pointing towards bullishness. Now, if you were to buy on this, so if you were to buy here, your stop loss would be here, right? Entry, stop loss. What would be your target? Well, you have a falling window here. Falling window becomes resistance. So that would become your target. Now, the problem with the target is that if you look at, this is the reward and this is the risk. So your reward to risk ratio on this trade is very poor, which is why I would not take this trade in spite of the fact that there are so many candle patterns coming together here. So this is what a sophisticated knowledge of Japanese candlesticks allow you to do. It helps you read the market situation correctly. Lot of things are pointing towards bullishness, so obviously the market is most likely to go up from here, but why should I take the risk? So even if one candle breaks above this resistance, there is still more resistance here. Okay, so it's too risky to take this trade. So let's see what happens next. Of course, the price goes up, it is breaking this resistance level here, and that too with a rising window. That's a very powerful candle which creates a rising window and at the same time breaks a falling window. Now here there is a resistance, even that resistance gets broken here and the market continues to ascend. So the fact that 9 signals came together here, that was enough proof that the market is likely to go up, but still I wouldn't take the trade. And I have given you reasons as to why I wouldn't take the trade. I would simply skip. Notice here that the falling window became resistance. See, these candles could not close above that. And that same resistance line, when the pullback happened, that same resistance line became support. So there is a concept called as change of polarity. The change of polarity means old resistance becoming new support or old support becoming new resistance. So a lot of things coming together on this chart. This is how you read a Japanese candlestick chart. This is a sophisticated reading of a Japanese candlestick chart. I am not even using any Western indicator here. Without even using Western indicator, you can draw so many conclusions on this chart. And this is exactly what I teach in my Japanese candlesticks trading mastery program. It has more than 1000 chart examples like this. Students from more than 170 countries are already enrolled in the program. So go to that link and have a look at some preview videos there. Start with level 1 program. If you are using a trading system, continue using that trading system. Don't change that because you are used to it, but add to your trading system the power of candlesticks knowledge. This is going to help you. This is going to enhance your trading success rate. If you can read Japanese candlesticks the way I am reading here, obviously it is going to help you because we are looking at a lot of signals here. Just 3 candles are giving you 9 different indicators. So indications. So learn to understand the language of the market. This is the Japanese candlesticks are a language of the market. If you understand the language of the market, okay, you will understand what the market is most likely to do next.